Charles Schwab, third story here. Charles Schwab, the reports are that they're in talks, at least, to buy some units of USAA, specifically brokerage and wealth management. And it appears, Sonali, this isn't so much the size of the deal as sort of the nature of it, to really diversify Schwab.
Right, it's not that big of a deal. It's only $100 billion in assets. And if you think about the size of Schwab, it's $3.5 trillion in assets. So at the margin, it's not that big. But for Schwab, only about a third of its revenue comes from the wealth management business. And think about it, this is a business where there's a ton of competition. Goldman Sachs just paid $750 million for a business themselves. So they're trying to double down here at a time when net interest margins account for most of their revenue.
It's interesting because you think of Charles Schwab as a brokerage that caters to mom and pop, right? And you think of USAA as being an association of financial advisors, and the idea being that that's where the money is going to come from, is from those advisory fees, and that the brokerage side, it's just that fees are getting shrunk to nothing. And that sort of seems to be, again, this sort of play in the asset management and brokerage businesses.
That's right. With Fidelity shifting fees down to zero and robo-advisors and Robinhood popping up, it's a lot of pressure on wealth management. But something looking forward that's a big question mark is we see the rich getting richer, but kind of middle America and then the mom and pop investors are not necessarily seeing that. And so betting on this part of the market is still a risk.